Hey, it's Danielle. Welcome to today's edition of Trader's Code. And I have something really exciting for you today. My great friend Tammy, she's going to be joining the show with us today. She's the Fibonacci Princess, and she's an absolutely amazing expert in technical analysis, which of course is one of the favorite pieces that I have picked up in the stock market over time from Carolyn Barodin, the Fibonacci Queen herself. So let's go ahead and bring on and welcome Tammy because we're going to be going over a ton of charts for you here today. Hey, Tammy.
Hey, Danielle. Thank you so much for having me on.
Yes, of course.
I'm
Thank you so
excited to
much
be
for
here.
joining me. This is great. I'm so glad that we're getting to do this.
Yeah, just a little bit of background about me. I have been trading for about 15 years now, and about 11 years ago, I met the Fibonacci Queen in the Grand Caymans. She was looking for someone to mentor, and that's how I became the Fibonacci Princess.
Perfect. Well, and I saw you on Charles Payne a couple weeks ago and he was highlighting your work. That was pretty great.
Yes, very exciting, very exciting. It's been so much fun to be on so many podcasts and TV, and I have you to thank for that too, Danielle.
Oh,
I'm glad to,
well,
I'm glad to be on the the journey with you.
that's
Thankful and
right.
grateful.
Yeah, I'm grateful too. I mean, it's great to have mentors that came before us to teach us to get us where we are today, for sure.
Absolutely.
Excellent. So let's go ahead and talk about the markets this week. I mean, I know today it's a little bit different just because we have a big Fed meeting tomorrow. And so looking at where we are right now, I mean, the indexes have traded up into new all-time highs, which is really exciting. There's been a lot of exuberance around that. However, with the big Fed meeting tomorrow and then also witching expiration, do you have any kind of recommendations for what you're telling your traders in your trading room?
Well, I think the best thing you want to do right now is really make sure that your risk is defined. I'll be honest with you. I'm really trying to stay flat. Of course, I've got my long-term positions on that I'm not doing anything with, and I wouldn't unless we just had a really horrific rollover. But to be honest with you, I do think a lot of this is already priced in. We've had a really great climb in the market, and we still have the seasonality of we could see a pullback in September. So, with all of that being considered, I would say it'd probably be better to see how this week shakes out and some of the levels that I'm going to give today. As long as the highs stay in place, those levels are still good. So I'll make sure that your risk is defined in case you do decide to take any of the setups.
Okay, great. I mean, I think that's a really important thing to point out because, for me personally, I mean, I was just doing the trading room at Simpler Trading right before this, and I was saying the same thing, hey, here's a bunch of different setups that I'm looking at. But, things can change substantially with the Fed. In this case, I feel like this one shouldn't, hopefully, fingers crossed, unless there's some big surprise. It shouldn't have anything too crazy afterwards. But for the most part, when the market is trading up into new all-time highs, I mean, I am typically scaling out of trades, taking profits, getting a little bit less exposure in the market overall, going into the Fed meeting. Now, I don't, just bail on everything. People were asking me in the trading room today if I was just going to close out most of my positions. And it's not that I was closing them out necessarily because of the Fed. It was more so that so many of them have hit extensions. And I know that's really important in your work, Tammy. So if you could just tell our viewers why the extensions are so important when you're trading and how you use those to determine where you're going to take profits.
Okay, well, one of the things that I do, want to touch on really quick, and give me a second here, and I'll get it pulled up for you. But here on, and I'm going to share my chart real quick. Let's see, here we go. And I have hundreds of charts, by the way. I look at everything. I look at indices, stocks, futures, commodities, uh, cryptocurrencies, you name it. I have a chart on it most likely. This is the cash SPX chart. We are extended. We've already met these target extensions. They would be green. They would be on this chart. And I can flip on over here to a more recent SPX chart. This is what, look, all the targets. Okay, I put a note on there the other day. Almost all of them are met. Nope. Now they're all met. These are targets from the 1st of August, the 20th of August, and the 2nd of September. We are extended on Cash SPX. On NASDAQ Cash, okay, when you see that blue line, it's showing you the low that the targets are from. Look at that. We've met the targets from the 1st of August. the targets from the 2nd of September. Um, and then we've met the first target from the 20th of August. So we are starting to get very extended here. Did I share that screen appropriately? Oh, there we go. I'm sorry. So here on NASDAQ Cash is where you see these targets have been met. Sorry, I didn't notice that it wasn't sharing. From the 1st of August, those targets were 23,838 and 24,155. And then you see the targets were met from the 2nd of September. And then the first target has been met from the 20th of August. The second target is 24,593. But we are so extended, we might not make it to that second target from the 20th of August. And this is the SPX chart I was talking about, where you see all the targets have been met. Okay. I use open, high, low, close to run my charts. I don't use candles because it's cleaner. But what you're looking at is the high from today right here. All right, all the targets have been met. So we're very extended, and you need to trail up your stops, lock in your profits. If you're already positive this week, go ahead and take those profits because we don't know what's going to happen the rest of the week.
Exactly. And you can get some pretty funky price action around options expiration too. And so, I love Fibonacci because that is really what changed my trading when I was getting into trading and I was learning how to trade momentum. And I found that emotion would just take over me because it was one of those things where, if you get in and the ticker starts trading lower, then of course you get anxious and, you're trying to decide where you should take your stop. And if you don't have a key technical place to do that, that makes it difficult. But then
Yes.
also to the upside, it makes it difficult too, because even when you're making money, people either want to take their profits too soon or they hold on way too long. And so that's why I love having this Fibonacci analysis and the lines on the chart to just give you a direct point that you can point to and say, okay, this is a spot where I think I should probably be scaling out. And, sometimes it'll go over, of course, but I think for the most part, I love the work and I'm so happy that you do this work because I find that it gives me a lot of great setups.
Absolutely. I mean, what we say is many moves to determinate at extensions of prior swings, and those are extension targets. So, I don't know about you, Danielle, but I've never, I've always appreciated being able to meet the targets and take my profits. And I'm actually okay if I miss some of the profits because guess what? Another bus is going to come along. So,
Yes,
another trade will come
exactly.
along with defined risk, and we just do it again.
Yep. Yeah, some traders in our trading room today were asking me about OKLO because that is a ticker that we've been in and we got in and yesterday it was up 15, 16% and I took profits on it and people were saying, "Oh man, you don't want to hold it just a little bit longer." And I just said, "No, this is one of the best trades this month. It's up 15%. I mean, take the money and run. You don't want to make the market gods mad." And then the next day
Yes.
it's you get into like a Rocket Lab situation. Yesterday it exploded. Today it's down 10%. So
Exactly, and OKLO is very extended now. We met the first target extension off of that 20th of August low at 91.97, so almost 92. And the second target is at 100. So no, it's smart. Take your profits. It's okay. Like
yeah,
you miss
that's
the rest of
right.
it, it's all right. It's all right. Find another one.
Perfect. Well, let's go ahead and talk about a couple of the Mag 7 names because I know that there's a couple right now that actually are good for setups. And then there's, of course, one of our favorites, Tesla. I mean, now this one right here now, of course, we know that it already exploded up into the 420 price point. But this is just one that I'm getting so many questions on. So what do you tell your traders when they ask you if this is a good spot for entry when it's up at 420?
Well, I'll share my chart again real quick
Oh
here
yeah, I
so
would
you
love
can
to,
see
if
what
you
I've
would just
got.
share your screen share and run
Sure.
with that, I would love that.
Sure, absolutely. So here's what I'm looking at on Tesla right now. So on it was yesterday, we failed exactly from my larger swing target to at 426. I mean, it was 425.7, right? Sometimes everybody jokes with me and goes, "Hey, can't you do better than that?" Jokingly that I literally the work works that well. So we failed at that larger swing target at 426, and I'll tell you. Right now, we're having trouble getting over the 786 retracement of, yeah, retracement of the swing up, which is around 422, maybe 423 if you round up. All right. So you can see today, if you go to a lower time frame chart, that we just had a hard time getting through that. Now, if we get through that, I'm looking for us to get over 426 to continue this move up and then pull back and be able to hold it. Okay. Because old resistance can become new support. But until we really can make a move over this 426 area, I do have a lot of clients that we're looking at that area for other reasons in addition to the Fibonacci work. So anywhere around 426, 430, we need to be able to get over that area in order to continue this move up, or we could see another, larger size pullback in Tesla. Now, right now, I do have price support all the way down to 388, but you can see I have even larger swings back here that could come into play if we ended up having a really big pullback on Tesla. So I know that it's a rocket ship right now, but like you were saying earlier, it's frustrating when you buy something on momentum and then you run right into some resistance and you end up rolling over and then you don't know what to do with the trade, right? You wish that you had waited for it to pull back. So right now I'm recommending with Tesla that maybe you sit on the sidelines a little bit until we can make a better decision here.
Perfect. I agree with you. And, I'm noting, I can see on your chart that you have some pretty thick red lines where that looks like a decent pullback zone, that first zone of support. What
Yes,
what
406
level
to
is that?
10. 406 to 10, which I do think right around that 400 area. I mean, I do have that as a level of support. I think, let's see, actually, we ended up coming down to 401. So I need to correct a little bit of that top level there. I've got that on my 30-minute chart. I did not uh, redo my daily, so I needed to redo that. So right around 400 is where we have price support. And listen, a lot of people might see that as a great opportunity to buy. And if you brought in at 400 today, you know, or yesterday, that's fine. But I just want you to be cautious coming into this 430, 426, 430 area because we could come up to that and fail again and just make a deeper downside correction. Or we could just keep going. You never
Well,
know.
and that's why I love the Fibonacci levels because, hey, if we break through, that's probably where we're just going to explode and head
Yes.
right on up into 450 and then back up at the previous high at 488. So, with the news reports that Elon was buying $1 billion of Tesla stock last week. It's pretty crazy. I think that goes to show, how high he thinks the shares are going to go, and especially with the robots now that are going to be coming out soon. Let me ask you, do you want a robot at your house? Because I need a robot because I have way too much laundry, dishes with kids and working. I need one of those robots.
I would be definitely, I'd be fine. I need like five.
Yeah. I would give away my car if I could
Yes.
have a
I need some
robot.
robots around my house also. Yes.
Okay, but you know what's tragic is that I was telling the kids at dinner the other night that we were going to get an Optimus robot, and they are both terrified. And they said that they would go live with grandma and grandpa if we got one.
Oh, no, not my children. If I told them that, they would be like, how many can we get?
Okay, this is the plan. Now we need our kids to talk. So,
Orlando.
yes. Yes, we're going to be at the money show in Orlando. So make sure everybody comes and sees us there because that's going to be a ton of fun. It's going to be, wow, in a month now.
Yep. October
Um,
16th through the 18th.
wow, it's coming up soon. Awesome. Well, let's keep going over some charts here. Let's look at SOUN. You sent me that one earlier, and that was one that some traders were asking us about in the trading room today. This one is up 3.52%, and it also has quite a bit of short interest as well. So for me personally, like when I have a ticker that has short float, it has 32% of the shares that are held short. And so when you have that and you have a bullish buy setup, the higher that it goes, the more that it can really explode. So that's why I really like to pair short float with Fibonacci analysis. And then also on top of that, I was noticing that their earnings estimates have gotten better every quarter as well, and their EPS
Oh,
numbers
great.
have improved. So in that kind of situation, you can also have a moment in time where, for example, there's an earnings report and then suddenly the stock's up 30%. So I definitely want to see what you have on this chart.
Absolutely. So the zone that I have on this one is 12.61 to 13.81. So what I want to tell you about this one and what I do like about it is that the 50 SMA is correlating with that cluster of support. And if we were to take that out, we'd either retest the low from the 22nd of August or make a deeper downside correction. So this risk is pretty clearly defined. I'll tell you, don't worry if you missed it because it is going to come into some resistance here around that $14-15 area, which we could see like a little pullback there. But this zone, as long as the high from the 8th of September, which is 15.53, as long as that stays in place, this support 12.6 to 13.8. So I usually say, 12 and a half to 14, just for nice round numbers. But that will include the 50 SMA. And as we all know, a lot of times stocks will bounce off the 200 or the 50 SMAs. Those act as support just by themselves. So when it lines up with a cluster of Fibonacci support, it's even stronger to me. So if you're already in the stock, watch out around this 14-15 area because we could hit it and it could cause us to pull back a little bit. But this cluster of support is still in in place. As long as the low from the 11th from $11.81 from the 22nd of August stays in place, the targets will remain $18.51 and $20.34. And all the moving averages are on the side of the bulls, which I really like that. I call that a royal trade setup. So this is a royal setup.
So there's just basically a lot of confluence with this chart. And I mean, that's one of the main things that I was looking for when I started trading was, okay, how can I find as much confluence as possible? Because, different analysts are going to look at different things. And so effectively, my idea was just, okay, how can I combine as many of those things as possible? Um, in order to identify solid setups. And Tammy calls them the royal setups. I like to call them the 5-star setups. But overall, I mean, I think this one looks great. And even if you go to a weekly chart on this ticker, you can see that the previous high was at 24.98 and you're currently trading at 14.69. So there's plenty of room on a longer term time frame to retest that $25 price point. And especially with all the short interest, if you could retest that and break through it on high volume, then that's where I would expect to see up into 30 and 35. So I feel like this one has a lot of good long-term potential. And, I think that this is a good one to pick out for the kids account, especially just to buy and hold.
Absolutely, absolutely. And that's another thing that I love about it is that it's a lower price stock. So there's a lot of people out there that can afford to buy it and add it to their portfolio.
Yes, and I think that's what's been nice about a lot of the tickers that we've been looking at this year is that they're kind of up and coming names and they are lower price stocks. And I mean, because for a long time, I mean, I remember 5 years ago when I was talking about Microsoft and it was $120 a share, and people at that time were saying, oh, it's too late. It's way too late to get into Microsoft at this price point. That's already had a huge move. That's crazy. You shouldn't do that. And then you look at it now, of course, and Microsoft today closed at 509.04. And so, I think it's great to have risk-defined setups for lower term timeframes for entries on trades. But then, of course, when you use those levels for higher term timeframes for investing, um, entering at 14 or entering at 13 or 12, is it really going to make a difference if it trades up into 35? I mean, you're just going to be happy you had it, right?
Right, right. Absolutely. Well, it also depends on how many shares you buy.
Yes. Yeah.
How
This
big
is
your
a very
account size
important
is,
piece.
right?
Yes.
Right.
Yes.
Well, speaking of Microsoft, I do have a defined risk on Microsoft of 497 to about 509, 508 here. It is testing the 50 simple moving average also. So I do like this zone of support on Microsoft because it's very clearly defined. because if we were to take out that 497 area, then we'd either retest the low from the 5th of September or take it out. So it's a good opportunity for you to have a trade with defined risk so that if it were not to work, you could keep your losses minimal.
Well, and that's pretty much my favorite thing about Fibonacci analysis is that you can keep your losses minimal, especially if you enter as close as you can to those zones of
Yes.
support.
Yes, exactly.
Yeah, so I got into Microsoft yesterday when Microsoft was breaking up above the 50 simple. It had some nice volume that was incoming. It has a squeeze on the daily chart. And so that was one that I took an entry on. And, today it looked better because initially this morning it was up, but it did kind of have a little bit of a weak close here and it closed on the lows of the day. So not 100% ideal. I also don't love how it fell below the 50 simple on the daily chart. However, because it has a squeeze on the daily chart, what that is doing is it's just consolidating it around that $500 price point. And so my idea with this one is, you know, get in now, buy it, see if we can, I mean, earnings is going to come up in October, right? And so typically with Microsoft, we see a nice run going into earnings. So I will say my entry might have been a little bit early for a move going into earnings, but I do like to combine the squeeze, Fibonacci entry, and then generally about 21 bars before earnings. So we have most of that criteria. And then, of course, it is one of my favorite stocks to buy and hold too.
Absolutely, absolutely. And it still has through the moving averages on the side of the bulls. And we all know that a lot of times a stock will slip just a little bit below the 50 simple or the 200 simple and then go back over it. So we see that happen a lot.
Definitely. Okay, well, how about you sent me BMNR, and I know you've got to have some Bitcoin there, don't you? So,
I do. I would have to open up another workplace, but I do have a BMNR right here. I actually had support for my clients yesterday on this one, and it hit, held, bounced. It has all the moving averages on the side of the bulls. I actually initially bought down there around that 39 area because of this price support that I had around 39.40. It has taken off though from that support I gave yesterday and is up against the little targets there. But what I would look for now is we could, possibly get just like another little pullback here and then set up that price support again, which might be around the 50 area, which is a nice even number also. And, buy in to continue this move up. It's got a lot of room to run. It's also got a lot of big money involved. That's why I like it.
that's right, because we got to follow that big money and big volume. And, I like this
Absolutely.
one. Yeah, right. I like this one because what you can see on here is that you've had continually increasing volume to the upside as the stock is trading higher. And so whenever I have volume that's continually increasing, you know that there's money behind it, right? Because that's what we like to see.
Absolutely.
And then we also have a setup zone that we can use that's very objective. So I like that too. And then, this one, as you have pointed out, broke out above the 50 simple on the daily chart. So break out above the 50 simple on the daily chart is something that for me, that's one of my favorite entries. If I can combine a squeeze, a Fibonacci support zone, a breakout above the 50 simple, those things combined plus incoming volume tend to work out pretty well. So,
And it has a high from back in July of 161. And the targets off that larger swing are 196 and 241. So you see these smaller swing targets of 80 and 91. But this is what the whole chart looks like. So sometimes you got to zoom out to look at, what else do you see? And it's an interesting chart for sure. I definitely put some in my account and my daughter's accounts.
oh, nice. They're gonna thank you later, I'm sure.
Exactly.
Mommy, what's BMNR?
Yeah. So I just joked with Remy. She got money for her birthday, her sixth birthday, and I was like, "Don't you want to buy some stocks?" And she's like, "No, you'll buy stocks for me." And I'm like, "Yep, here we go."
I know. I have this problem with my kid too. I'm not sure what to do about that. Maybe they should have been the secret stock accounts, or I don't know. It's too late
Exactly.
now.
It's too late now. Well, what about, do you want to talk about Rocket Lab?
Yeah, let's look at Rocket Lab because, this one, man, sometimes these volatile stocks, they can be great. They can also be a huge pain. When you're looking at the long-term pattern, I mean, it's just beautiful. It's, continually trending higher. You
Mhm.
can see the way that this stock has just exploded. Yesterday, it had a huge move. I had a bunch of calls on it, and I took 50% of my calls off after it exploded. But of course, I held the other half. And then today, bam, the short sellers just came out of the woodwork. And, it's always a bummer when that happens. And it's one of those things where it's like, when you're scaling out of a trade at a target, and in this case, it was just shy of the target too. So it wasn't even at the full target, but because it
Yeah.
was up so much yesterday and the day before, I wanted to take some profits. Um, and so everybody's asking, what do we do with Rocket Lab? It's down 12%. And I mean, my initial response was, okay, this happens sometimes when you're trading a ticker. It has 14% short float. Sometimes when it makes a new high like that, the short sellers like, come in and they're just selling it instead of buying to cover, which would push it higher. So, I mean, I'm still holding half of my position in here, but I definitely want to know what kind of buy setups that you have or a spot where you would say, okay, this isn't worth it. Just get out.
Well, I really like this 45 to 47 area because it says 46, 47, but if you go to 45, then you'll get that 50 simple moving average. Because look what happened on the 20th of August. Okay, we came down, met support, tested the 50 simple, bounced,
Perfect.
pulled
Yeah.
back, met support, 50 simple, bounced. Okay, we did meet the first target extension off that 5th of September low. So it made sense that we pulled back. Now we're pulling back again, but we have not met the larger swing target extensions from the 20th of August low. So to me, this is a good opportunity to get bullish again. Like I said, the setup zone 45 to 47 is a good one because it will include, actually, maybe you come down to about 44 where that pink 618 is. And you've also got symmetry there. So maybe 44 to 47 is a nice setup zone for you to have. It includes the 50 SMA and it includes a ton of symmetry and a couple of that 50% in that 618 retracement.
Perfect. I like it. And I mean, if you go back and I mean, you pointed out when the low held that, let's see, September 3rd, it looks like that
September
was
5th.
an
Yeah.
that was another day where I remember it was just getting hammered and people were like, what do we do about Rocket Lab? And that day, I said, okay, we just need to wait and see what happens the next day because a lot of times with stocks like this, when they get hammered one day, the next day they're up because everybody's buying it, right? So one day
Yep.
is not really a
And
trend.
look at that was a great setup around the 41 area. I did have that set up on Rocket Lab because Bruce actually took it. But some of my clients did too because they asked me today about Rocket Lab. That was one reason why I looked at it. I own Rocket Lab, but I've had it since like $5 and $9. So you know, um, I bought it a long time ago.
Great job. That's an amazing entry. What was it about it that you liked
It
back?
was way back here, and I had a setup. I had defined risk setup, and I just liked it. And I was reading a lot about it on X and how it had a lot of big money backers. So I like to see that big money flow, where the big money's flowing into.
That's right. I love watching the big money flows too, because we're just retail traders here. I mean, we're not really going to move the markets, but if we can recognize and identify the technical patterns and the setups, and we can jump on that big money and the people that are actually moving the markets, and we can just ride that wave, baby.
Absolutely.
Perfect. Well, you had a couple other setups here that you wanted to go over. Open is one that people keep asking me about, and the reason why people are asking about this one is because it's just had some crazy moves. And it also has 26% short float. So with such a significant percentage of the shares that are held short, I mean, if it gets going, it can really get going if those short sellers buy to cover, which is, I would say a big part of the reason that it's traded from what, like $2 a share up into 10.
Yeah, I was going to
So,
tell you. So when I grabbed it was right around the 7th of August. I actually posted that on X too. I mean, I posted Rocket Lab on X too. So, um, I grabbed it right around the 7th of August. This was something that was okay. That was when I was on Charles Payne. Um, on Fox Business, and the guy that was on the show with me, I think he was right after me. I heard him talking about it, and that was why I ended up running it and looking at it. And so I did buy it then, and I'm obviously up really nicely right now. Bought a couple hundred shares there. And then now I am looking to add more because it's still only what, $8. I haven't, let me see real quick, because we do have a little, what I call a two-step pattern forming here. So I do really like, I don't know what people's risk, what you got to know what your own risk tolerance is, but I would, literally go from this $7.26 to this $8 area, maybe $7, $8 area to look to get into open. That would be your defined risk, so that you can start riding this train. And if it goes to that 7 area, I would start getting a little bit nervous.
okay, perfect. I mean, I love having those risk defined entry points. That's very helpful. So let's see. We have a question from a viewer, and they're asking, how do you know which earnings reports to trade? So I think I'll just go ahead and start with that. I mean, for me personally, I look at earnings reports in a variety of different ways. So, first of all, I will trade going up into the earnings report, usually like 3 to 4 weeks before the earnings report. Basically, I look for tickers that are in a trend, they're consolidating. They have a history of reporting well after earnings, and then they also have a history of rallying going into the report and then preferably after the report as well. So you're basically just trying to identify something that's already strong, and then you have a news related catalyst where you think that buyers are going to come in before that earnings report because they want to own the shares, right? So one main way that you can do this is by using these Fibonacci setups. So you can look at an earnings calendar. You can see when the core earnings reports are coming. The core earnings reports are always going to be, Microsoft, Netflix, Tesla. Usually Netflix is always going to be first. So if I just throw up one of my charts, I can see that the Netflix earnings report is supposed to be on the 21st of October. And so generally around 21 bars prior to that earnings report, daily bars on a daily chart, is when I start looking for these kinds of Fibonacci setups before the report. Because if you can get in at that time frame, then basically what you can do is you can get in before the implied volatility in the options market starts spiking, which is good if you're buying long calls, because what you want to do is you want to buy those long calls and then have those long calls go up in value because the implied volatility is spiking going into the news report. And then also because ideally you have a bullish setup too. So you try to get a double whammy on those. Um, and then as far as knowing which ones to trade, I mean, for me personally, it's on one hand, it's kind of the same every quarter. And then on the other hand, different quarters are different because on one hand, I'm looking for stocks that have specific setups like the ones that Tammy's pointing out, right? So if I have a setup and we're also in that time frame, that just gives me a strong point of analysis. But then at the same time, there are those kind of stocks that I trade quarter over quarter. It's like Tesla, always love to trade it going into earnings. Sometimes it's a short when people are hating on Elon. Sorry, Elon, poor guy. Um, Sometimes it's a long, and then I have other stocks that I'm looking at, like for example, the semiconductors, Nvidia, AVGO. Those have been really good longs before earnings. So sometimes I'll do the same patterns quarter over quarter, but also kind of depends. Tammy, do you have any insight as far as what you look at surrounding earnings?
Well, I mean, just to piggyback on what you're saying, I look for trading into earnings, but I typically don't hold through earnings. I don't do that anymore. I used to many, many moons ago. But the problem is now even if somebody's a company beats earnings, if they get downgraded or some kind of bad news comes out or anything else like that, you just really don't know which way it could go. So my idea is to ride the wave into earnings unless you're just completely comfortable with holding it through earnings. I mean, that more recent Oracle earnings, that was great. And I had a defined risk set up for my clients. And I did have people that held it through earnings. And of course, they were absolutely thrilled that they did. But typically, I don't hold things through earnings because what I say is earnings is more of a gamble. And I don't really
Yeah.
like to gamble with my trading accounts. I leave that for Vegas.
Well, especially for the shorter term trading accounts, but of course you hold the longer term investments.
Absolutely.
Yes.
Absolutely. Without a doubt.
Yeah, and then so we had another viewer question, which was, is there a specific sector or anything you like to look at before earnings? And I mean, for me, I would answer that and say the reason why these kinds of pre-earnings trades work is because people want to buy the stocks before the report, right? People want to get in because they want to potentially have the oracle where it gaps up 30-40% overnight. And so quarter over quarter, I feel that it can change. But for the most part, especially over the last 10 years, especially over the last 5 years, I mean, it's been tech stocks. It's been tech stocks, semiconductor stocks. Now we have all these AI names. More recently, we've had a lot of quantum computing names. We've also had AI infrastructure names. Galaxy is one that I've been trading recently. So there's been a lot more, I would say, newer names for a long time. I mean, for me personally, I was trading the Mag 7 just all the time, just rinse and repeat over and over again. But I would say I like to trade, of course, what's hot, and I'm sure you do too, because that's where the volume is and that's where the big money is. And if big money's not moving it, then it's kind of boring, right?
Absolutely. And as you know, sectors can change. The popular sectors can change. If you're trading based on sectors, you need to know what sectors are doing well at that time.
Definitely. Okay, great. Well, we're just about to wrap up. So are there any other charts that you wanted to go over? One last one that you have there?
Well, I do have Oracle because that's kind of a hot topic right now. And I would tell you if Oracle goes through this 297, 300 area, then it is going to make a deeper downside correction, most likely. And I do have price support. Let's see, 291 and then 282.85 area, if anybody is looking. I do like to, keep charts on some of the, things that I hear that are more popular trending stocks, I guess you'd call them. So these are some different levels for you. But what I would tell you is because there are so many different levels, be sure to use triggers or indicators to tell you if the level will hold. Now, I do like calm here. It has made a deeper downside correction and taken out the low from the 4th of August, but we are testing the 200 simple, which is that pink dotted line on my chart, with symmetrical support, which are previous swings that have happened in the market. And it's a nice round number, right? 99 to 100. So that's really going to be your setup zone there. If you're looking to get bullish on calm, I do think it's quite interesting. Has been a pretty popular stock.
Great. Well, thank you so much. That is very enlightening. And I love all these different setups with defined risks. And I really appreciate you coming on the show with me. And I definitely want you to tell people where they can find you.
Absolutely. I'm the Fibonacci Princess. I'm on X at Trader Tammy One. And I also run charts at elliottwavetrader.net. But at some point soon to come, there may be some FibonacciPrincess.com. So be on the lookout for that also. And be sure to look out for my YouTube channel, Tammy Marshall, Fibonacci Princess.
Great. Well,
Thank
thank
you,
you so
Danielle.
much. Yeah,
Thank you for
this is
having
so,
me.
of course, this is so much fun. We'll definitely do it again soon.
Absolutely.
All right. Have a great day, everyone. We'll see you in the next episode.